Welcome to Trading Lounge and the US indices for Tuesday, January the 11th. We'll look at the Russell, the NASDAQ, and then the S&P. So with the Russell here, we're looking at wave 3 here, coming down to wave 4. We're looking at an A wave, a B wave, and then 1 and 2 and 3 and 4 and 5. So in most cases across the board, even in stocks, Microsoft and so on, we have wave 1 here and we're looking back for wave 2. So we're looking back for a 50-60% retracement level for that. So from wave B here down to wave C, we're looking back into this little area through here. Let's quickly look at the tick chart for this and look at that wave 2 rally. So we're counting down from B as 1, 2, 3, 4, and 5 here, and then we're looking for an ABC rally that may or may not go back right to this box here, the 61.8%. There is really good supply, obviously coming across the 2200 area through here. So all we can do is just count the structure. So we'll be looking for an A wave, a B wave, and a C wave in that place, and then we'll be looking for short trade setups at that point. With the NASDAQ here, much the same as the S&P. The S&P has taken out the top of wave 3 here, but the NASDAQ has not. So we can look at this in simple terms as an A and ABC here for the B wave, and then wave 1 down here. There probably is a case for having the A, the B, and the C wave sitting here and being completed. So wave 3 here, an A, B, C for wave 4 being completed, and then straight up from that. So we'll keep an eye on that. I don't think it's the case when I look at stock and so on. So we'll have to just keep an eye on that. Just before we go to that intraday chart there, for the NASDAQ, not so much the S&P, but for the NASDAQ, there is a reasonable case that we could look at this rally here as a wave 4 coming back to the 38.2% retracement level from this top here at that point. But it still doesn't matter. We're still going to get this. We can see that we've got getting a rally at this particular point in time. But let's just go to the tick chart and check on that particular rally. So this is what I was thinking as from wave 1 here to wave 2, wherever that is, up here yonder. We're looking for wave 2 is normally a zigzag pattern, which is, well, just quite simply an A wave, a B wave, and a C wave, a zigzag like that. And it's also normally a 5-wave structure, a 3-wave structure, and then a 5-wave structure. So a 5, 3, 5 structure for this. You can see here that we've got 1 and 2 here, and 3 and 4. We're going up for wave 5 here. It will meet supply over here, supply just meaning sellers. And then it'll have a corrective move after, once that top comes in here. The extension's in wave 5, so wave 1 and wave 5 could be roughly the same length. And then we could look for a 50-60% pullback. But don't bank on that, just count the structure for the B wave, which will be in 3 waves, and it will also be an A and a B and a C, so a 5, 3, 5 structure here. And then this 5-wave structure here should mirror this 5 waves over here. If it's a C wave, it should be a little bit more lazier than the A wave, so a bit more of an angle. If it's like this, then it'll have the personality of a 3rd wave up, so wave 1 and 2 and 3. So we'll be keeping an eye on that, but we'll be looking for the short trade for this market. For the S&P 500 on the daily chart here, this is the bigger picture here where I've got wave 3, 4, and 5 here for intermediate wave 3, and then minor A and ABC for minor wave B, and then minute 1, 2, 3, 4, 5 for minor wave C of intermediate wave 4, roughly pulling back to the wave 4 of 1 lesser degree. As I mentioned in the stock video today, you'll be able to see that we've got a lot of stocks have got the 5-wave structure to the downside, and we'll be looking for an ABC correction coming back to the 50-60% retracement level. I could have this wrong in a couple of ways, but the first way, I've got intermediate wave 3 here. If I go to this chart here, it will have it slightly different. It will have it 1 degree smaller. Not that it's a big issue at this point, so instead of an intermediate wave 3 here, because in the last video, in the last chart, we looked at intermediate wave 3 here, but in this case it would be minor wave 3 here with an A and a B and a C wave here, just to let you know I'm tracking this as well. Obviously the 5,000 is, well, for me it's the second strongest number in the market. Obviously it's a psychological finishing line for things, and we normally look for a pattern coming into a level like that here, so the arrival, the reaction, the first high above the level, and ABC. So we'll be staying at the 5,000 for quite some time, being above and below that level. And when we're talking above the level here, we're talking about minor group 1, so 100, 200 and 300. Good enough, near enough, rough enough, there we go. And then here we've got group 2 here as well, so 46.50 is the lower end of group 2 there, so this will become not that important right now, but it will become, if I can nail that. And then the 72 in here, okay, we got that. Just to point out that this is the reason for putting this in here is because it won't be the total swing range, but it'll be the initial swing range and the later swing range within this. So when we're working with this number here, I wouldn't really make any trading decisions within this particular space here. I could be building in one direction or another, but I would have to give it this space here. If the 3 becomes the support up here, the 300, then we'll be leaving this number and pushing up to the 500 at that point, and same below. But we don't need to go into this right now. We'll just go back to the this chart here for the moment, and this is what we're looking at. We're looking for a 50-60% retracement level here. It's always just sticking this, the flag in the sand, so to speak, and it doesn't, sometimes it can be hauntingly accurate, hitting the 61.8% and all that, but otherwise it could be above that and below that. But it does always gives us a nice starting point. And once again, we're in group 2 here, so I've just put group 2 on the daily on the other chart, but here we've got it here 65, 72 and 80. So we can see that it's the resistance here, and this is the type of activity that I'll expect before getting to the 5,000 here. We call 8 a profit taking number, and we can see this coming into play here. As far as the crow fly goes, the crow fly, so we've got wave 1 here. We're looking for a 3-wave swing here, the same as we just mentioned on the NASDAQ. So let's go to our 4-hour chart here, and we're looking for this 3-wave swing here. So from B here we're going down. We've got wave 1 here, we've got an A and a B and a C, and let's just drill into that further here just to break things up and look in a bit more detail. So 1 and 2 and 1 and 2 and 3 and 4 and 5 for third, fourth and fifth wave. We're looking for the A wave, the B wave and the C wave here. We will be looking for short trades up here when that arrives, but that's a couple of sessions away. And we need to see too that one of the little tricks which is not in the book is that because that's a 50-60% retracement level, if we get 3 waves to this this move to the box, then I know it's likely to be corrective. If we, however, get 5 waves to the box, then Houston, we've got an issue because we'll be going higher at that point. But we're not going to miss anything, because if I've got this wrong and we do get 5 waves here, well, then we're going to get an ABC pullback here to 50-60% or 40%, whatever it may be, and then we'll be looking to go long above these levels here. But otherwise we'll be looking for the short trade. So I'm just going to duck into the tick chart here so we can get a grip on the intraday here. So just to let you know how I've counted, I've got wave 1 here, in this case, slightly different, and 2 here, and 1 and 2 here, and 5 waves down here for 3, 4 and 5. And then I've got 4 over here, and then 1 and 2, and 1 and 2, and 1, 2, 3, 4, 5 for the third, fourth, fifth for the third, the fourth, and the fifth. So it's a little bit different from the other one. And I did make a mistake in all of that all of that sort of volatility and vibration there. So apologies about that. But the bigger picture, you know, we have nailed it down quite nicely, I thought. So yeah, but it's hard to be perfect like you. It's good now that we can kind of see. I just probably need to pull this apart a bit further, but I'm just assuming that that's the whole third wave and the fourth wave, and we'll look at the fifth wave here. The fifth wave, because the extension's in the third, the 1 and 5 will be roughly the same. Once that's completed here, meeting supply levels up here, then we're going to see this correct here in 3 waves. This also gives you a bit of a buying opportunity for short-term traders here. Now, many roads to Rome, so to speak, but if you've got a very clear definition here, then you can use that if you can't count the structure here, or if the market trades up. This is the closest largest number here will be the 64650. That's the lower end of group 2, so the top end of group 2 is up here for this, and then the 47 here is the other side to that there. So I will highlight that. We talked about this on the daily chart, and just to highlight it here a little bit further, so when we talk about 8, we talk about group 2, so 65 and 72. Now obviously inside of, that's just the shell of group 2. With inside of group 2 there's a hell of a lot going on in there as well, but that's another story for another day. But what I wanted to say is that if we've got 1, 2, 3, 4, 5 here, and you're having difficulty to count that up, if you see now that the market is trading above this 4650, if it trades up here and then trades back below here, you may be able to get a little classic trading levels pattern sitting back over here. So just really waiting for that first high above the level there, and then the ABC pattern here for that, and then trading up to the 47. Don't push it past that, but going from here to here gives you a nice move in here. There will be issues in here, and you also need to count 5 waves in here. But that pattern, if it drops below here, then in here we're looking for this little pattern here. Now there's 2 ways it could do that. It could be nice and clean like this here at the 4650, and it's that first high above the level which will be your reference point that you're looking for. You can drop that down into here. Most of the time it will drop down below the level, so we end up with the most common pattern where it drops below the level, and then you need to work the trade over here. You still got these highs here where you can add to your positions, but in this little space here you'll find that this bigger picture is all tied up in this little picture. So we'll have the arrival, the reaction, the first high above the level, the ABC pattern. So you can refine what you're doing at those stages, and you can also build the trade in through this subgroup 2 level here, which is also a smaller group 2. So we've got a minor group 2, so 65, 72 and 80 up here. That's the minor degree. And then in here we've got the same group 2 here, 65, 72 and 80 of sub-degree levels. So you could also build in there, but the reflection over here, it will mirror this over here. Markets have a memory as such, not just markets, but everything in life, you know. If your football team hasn't won for 20 years and it gets in the final, everybody will be remembering back, you know, that particular low point or high point they had previously. So yeah, everything is connected. I'll leave it at that. Thanks for tuning in. Much appreciated. Cheers.